Welcome to episode 120 of the Oklahoma Real Estate Show. On today's show, it's Beth, the founder of Lifestyle Equities Group and Lifestyle Ventures. She's active in construction and real estate for over 20 years. She's redeveloped over $4 million in single-family homes, as well as assisted in construction of over $35 million in outdoor living spaces. Currently, Beth is the GP on 500-plus multifamily units, holding equity in an RV park and as well as a hotel in Panama. And she's working on various other projects, including a townhome development. Beth is on the show today to kind of share a glimpse into the world of arbitrage and syndication. She's going to be telling us what she's looking forward to this year and into the coming years, and what you may need to know about real estate, residential and commercial going forward. Beth, welcome to the show today.
Thanks, Lynn. It's great. Glad to be here.
So kind of bring us up to speed for those that may not understand, real estate is always pitched kind of as a passive investment, but that's not always the case. A lot of landlords find that this supposedly passive investment ends up turning into a lot of work. But what you guys do is really passive in that somebody just deposits money into your event or your syndication, and then they set it and forget it. So tell us a little bit about how that works and kind of talk me into what's going on in your world today.
Sure, absolutely. First of all, thank you for allowing me to be here, and thanks for the wonderful introduction. So what you're referring to is called a syndication, and really syndications from our end, as the general partners are not passive by any stretch of the means. I mean, they're very active because we're doing all the work, right? We are sourcing the deal, underwriting it, getting it under contract, and then sourcing debt, sourcing equity, taking it to the finish line, and then the real work begins because whatever the business plan is for that particular asset, you need to perform that business plan because that's what you've sold investors on in terms of them actually bringing money to the table. So from an investing standpoint, that's where it becomes passive. There's investors called limited partners, and they actually invest into these syndications. And essentially a syndication is just a pool of investors coming together to essentially bring the equity that's needed in order to close on a deal. And of course, that equity is the difference between the sales price and whatever debt you're able to obtain on the property. So those investors, yes, technically they are passive. They're just putting the money in, and they are looking for that, quarterly distribution, semi-annual distribution, whatever it's going to be, and collecting that debt, putting it into their bank account, and then waiting until, the asset either gets refinanced, which generally that's somewhere between year 3 and 5, or it gets sold, depending on what the play is and the business plan is for that particular asset. So when it gets sold, that's when investors usually get most of their money back, unless they are refinanced, unless an asset is refinanced, and then some of that capital is actually returned to them.
What kind of profit gains can somebody expect by doing something like this?
It all depends on the asset itself, and value added plays sometimes can yield greater returns. Right now, I know for us, we are looking more at cash flowing properties just because of where the market is at. So a value add right now is just not sort of what we want to be going after, just because we know that there's going to be so much work. Construction materials are so much more costly, and just as a play overall, we know we're not going to be giving the sort of returns that we want to give to our investors. Generally speaking, there's this benchmark, so to speak. It's called an equity multiple, and it basically describes how much an investor can get back. So if you have a 2x multiple, that means that basically the investor's going to get 2 times their money back. So if they invest $100,000, they're going to get that 100 plus another 100 back, so $200,000. So we like to, be somewhere around that 2x multiple. obviously anytime you can be pushing the 3X's and so forth, then it's a really good deal. But, you have to be careful with that. Be careful with the numbers. There's a lot of operators that sometimes underwrite very aggressively. And in times like these, that's not the time to be aggressive.
So what I heard you say is it's not uncommon to be doubling your money in a syndication. Is that what I heard you just say?
Correct. But over the period of time, right? So it's not like it's doubling your money within a year. Generally, there's usually a five-year plan with most assets.
Okay, you mentioned, value add being, kind of like a flip, if you will. And I could see how with current cost of things and economic uncertainty that may be a little bit more riskier bet. So now you're identifying income properties that are cash flowing, and that would be cash flowing either from day one or cash flowing over time. How are you identifying those?
Cash flowing from day one. And like, for instance, we just closed on a student housing deal. We closed on it in December. This particular student housing deal was a Class A property, so newer. The developer had it for several years, and usually what happens with developers is they will develop a property, build it, and lease it up, hold on to it for a few years, and then they turn around and sell it. Well, this one happened to be 100% leased for the school year 2022-2023. As of January, I would say end of January, I can't remember the exact date, we are actually 100% pre-leased for the school year 2023-2024. So this is just continuing to cash flow. It's 100% leased. The fact that it's a newer property, there's not a lot of, there's maintenance obviously to be done to it, but there's just not a lot of work that has to be done. The student housing, and one of the beautiful things about that, mom and dad, they're signing on the dotted line for it, generally speaking. And leases are actually year-long leases. So it's not just the school year. So this property continues and will continue to cash flow every single month. And that's a beautiful thing for our investors. So we're looking forward to being able to, send our investors their first distribution after this first quarter. And I think our investors are going to be pretty happy with it. So actually, I know they're going to be pretty happy with it.
So when you got something like that set up, what is typically the time frame on something that is a cash flow focused investment? Is that a longer time frame? You mentioned before the value add was about 5 years. Is this about the same time frame that they're committed, or how does that work?
We have a 5-year business plan with this one, so yes, about the same time frame. And I think a lot of it is just contingent upon what it is that you want to provide to your investors. What are the returns? What does the property itself lend itself to in terms of what's the best play overall from an investment perspective? So, but yes, 5 years for this one is our goal.
So where do you see the industry kind of going? Where are you focusing your efforts to see the most gain here over the next, let's say, 24 months?
That's a really good question. As I stated earlier, with respect to multifamily properties, my team and I, we are going after cash flowing properties. We're being very conservative with our underwriting. Very selective about what it is that we are taking on. We've heard a lot of rumblings, so to speak, that some operators who were super aggressive, over the course of the last 12 to 18 months are finding themselves in a bit of hot water right now in terms of struggling with the properties that they're managing, the assets that they're managing. So we are electing, of course, and always will be electing to be very conservative. I still think that there's, plenty of deals out there. I think we're going to see maybe more seller financing with the interest rates staying where they're at. Because, sellers who want to sell know that they're not going to be able to get rid of some of their properties with the rates on, where they are. So if if they can, we can either maybe assume some loans, which we actually did on that student housing property I was telling you about. So we assumed a loan there, so we could continue to assume loans or find some seller financing. And I think that's going to be key. I know a few smaller deals that I myself have been looking at for some Airbnb. These are smaller hotels. They've been offering seller financing only because they know that it's going to be harder to get that financing on a hotel. And so this is a way of being able to offload a property while still being able to move on from it. And what most, sellers, there are some very savvy sellers, and sometimes sellers, don't realize that seller financing can be a beautiful thing, from a tax advantage standpoint and so forth. So, the tax implications can be slowed down over time as opposed to, all at once.
Now, in closing, you've done, I think, $4 million in single-family homes as well. What do you have to say for those folks that may be looking at doing a renovation or a flip right now? What's your advice to them?
Right. The price that you buy at is always going to be the most important component. That was one mistake that I think, in fact, I know we did early on. You were always looking at the ARV, like, hey, where can this be? As opposed to, where is it right now? What do we need to put into it? And then, hope that we can get that ARV. It's just going to be really important to hone in on costs. And once you figure out, like, hey, this is going to cost us, $20,000 in renovation, tack on another 20% on top of that, to be on the safe side. They used to say, oh, maybe 10%, 15%. I would say 20, even 25%. I would rather have, a larger cushion and then come out ahead, once I sell it, versus underestimating. And because those material costs, prices have not come down. I think someone said only maybe lumber has come down a bit, but aside from that, everything else is still high. So, I think there's good deals to be had. Definitely there's good deals to be had. So don't give up. I know for us, we're taking a step back right now. We finished our last project. It's out and put it on the market in November, closed on it in early January. It's a beautiful project. We loved it. But again, it was those material costs that actually cut into our profit, unfortunately. But we're taking a step back and we're going to kind of watch the market a little bit. We're trying out this Airbnb arbitrage and we're going to see where that goes. And I think we'll probably get back into another flip, maybe towards the latter part of this year. But I'd like to just kind of watch the market a little bit more and see just, how quickly our houses move once they are in the market. I'm hoping by the end of the year, things sort of, we have a new normal. And once you know the new normal, it's easier to go back into something and be able to plan accordingly.
Well, Beth, thanks for coming on the show today. Is there anything you could think of that we may have forgotten, and throw that out there? And then also how people can get a hold of you if they want to pick your brain on partnering with you on your next syndication. Like I said, you've done vacation, resorts in Panama. You've done 500 plus multifamilies. You've done single families. You're doing now Airbnb. You're kind of an entrepreneurial of real estate, and I'm sure someone would have a lot of fun talking with you.
I would love to talk to anybody, and I do enjoy real estate. I'm having a lot of fun with it. Yes, we did not talk about Panama, but there's a lot happening in Panama. Looking at 3 hotels, we have 1 already, looking to acquire 2 more. So always looking for investors if anybody would like to chat about it. But you can find me, on Instagram, you can find me at Investing with Beth, on TikTok at Investing with Beth as well. Facebook, I do have a Facebook page at Investing with Beth, or lifestyleequitiesgroup.com, lifestyleventuresgroup.com, or 513-470-1078. Shoot me a text message. I am always available and would love to chat.
Well, Beth, thanks for coming on the show. For more information about the Central Oklahoma market, visit oklahomarealestateshow.com. Thanks for listening to the show today.